In the last lesson, we looked at 4 critical areas for your business to perform well, and those being lead generation, lead conversion or sales, the delivery of your product or service, and then finally the results of those activities, which is your cash flow and income. In this lesson, we want to look at business performance. And before I get started in the scenarios that you see on the screen, let me kind of orientate you to the chart here. One thing that I do with startups when they've launched is help the owner track revenue on a month-by-month basis. And it produces charts like you see here. And the value of that is that you can very quickly, sometimes I'll even do this within weeks, you can very, very quickly see whether or not a business is gaining revenues over time, stagnating, or is about to fail. So I think this is a pretty good indicator that if you measure your revenue over time, you're going to see whether or not you're on course or off course. Things happen within 30 to 60 days or 30 to 90 days, depending on what you're doing. So anyway, this chart is on a 1 year, 12-month basis. The other thing I want to bring your attention to is what's called the break-even point. Think of this as kind of like a balance. This is where your revenue is equivalent to your expenses. So if your monthly expenses was $1,000 a month and your revenues were exactly $1,000 a month, you would have the ability to meet all of your expenses and your business would be sustainable. It would be able to continue month after month. That is the goal of a startup, is to get to this point where the business is sustainable. The challenge is, and this is where these performing profiles come in, is that not all businesses get there. In my experience, I would say roughly about 10% of the businesses that I work with, and usually I'll get there after the fact, and that's part of the reason why, is they will end up closing. And it's always because their revenues, or their expenses rather, exceed their revenues. The bills that they have to pay are way more than the cash coming in. Sometimes you'll see the business owner will supply some sort of credit or additional capital to that to keep it going, but there's eventually just not enough revenue to keep it going and the business closed. The next scenario is the performing scenario, and that's the one we obviously want to see. And I see this in about another 10% of the time. You'd wish that this would be more, and that's what we're hoping to do with this course. But typically what happens here is that there are favorable conditions with the business, and the business has all the right things happening to it, where you see this nice month-over-month increase in revenues. And this can happen, just like you see here. In fact, this is my measure, 3 months of month-over-month revenues. You can see it go up here to above the break-even point. This business is sustainable. This business is bringing enough revenue in each month to maintain itself, to pay all of its bills, and hopefully the owner some income as well. Now, that means that 80% of the time, I'm seeing something like this. This is what I call an underperforming business. And basically, the characteristics are the revenues are increasing, but slowly. And so there are some favorable conditions for the business. The business owner may have some the critical skills that we went through in the last lesson. They might have the technical skills, for example, or they might have some sales skills or a combination thereof, but something's missing. Or it could be a critical resource is missing. But whatever it is, the business is kind of just getting by and not really getting above this break-even point. And that means that the business owner has to be bringing in some excess cash from somewhere else, either a credit card, friends and family, something to keep this business running. So it's really important that you establish what your break-even point is and that you measure its performance. But it's also even more important that you identify favorable and unfavorable conditions for your business ahead of time. And that's what road testing your business idea is really all about. It's about identifying kind of the forces that are for you or against you that will actually help you to perform or might cause you to underperform. So you could identify, for example, whether or not there's strong demand for your product or service. You might be able to identify whether or not your business is going to cash flow to an acceptable level in time. You might be able to identify whether you're not the business skill sets that you need. I think that's the real plus of doing a road test, is that you can actually get a glimpse ahead of time of the things that are going to help your business to succeed and may impede your business. That's why you want to do the road test. If you don't, these conditions are set. They're going to be here regardless of whether you identify them or not. And what will happen is that when you launch the business, it's going to take its course. So by knowing these things ahead of time, by identifying these conditions ahead of time, what you can do is you can identify favorable and unfavorable business conditions by doing a road test, by looking at your idea and kind of testing it in all the critical areas that we talked about in the last lesson. You can adapt, you can make changes because you know when things are in your favor or not. That increases the odds of your business being successful. And it is incredibly important that you do that. The last thing to spot any serious flaws that might have an effect on your business that may cause it to close. You may identify that your pricing isn't correct. You may identify that the amount of time that it takes you to actually get the money in the door may not be sufficient for you to pay your bills on time. It could be a number of things, but you can spot those business conditions early on, and you can make modifications that might actually make those more favorable. So this is one of the most critical things, I think, to understand about road testing your business idea is that you can actually change the fate of your business. You can actually create a business that's performing from a business that might be initially underperforming or might even be ready to fail out of the gate. And that, I think, is one of the most important benefits from this entire course.